you're about to hear now from a lady, again, very powerful lady. I mean, when you heard Jerry Clark talk about the personalities, well, she's a combination of all those personalities combined. That's right. It's incredible. As a matter of fact, so she's very detail-oriented, and obviously talking about taxes and detail things like that. And so she knows the facts, and she investigates the facts, by the way. She also, by the way, is a very strong leader, very powerful leader, and she's a charging, I mean, like Jerry Clark talks about charging through the jungle. Well, my friend, she can make things happen. Also, she's a very friendly type person, loves to have fun, loves to kick it, my friend, and yet she loves people, cares about your success, and that's why she's here this morning. So Dr. Katrina Ferguson, author, minister of the gospel, incredible human being, again, who's dedicated part of her life to your success. Now, are you going to allow her to empower you, or would you fight against her? And I think your answer is simple. No, I'm going to allow her to empower me. So get something to write on, something to write with, because the next voice you hear will be that of our global ambassador, Dr. Katrina Ferguson.
Thank you so much for that glowing introduction, Dr. Stan. Good morning, everyone. Good morning, Coach 100K. You know, it's funny. Sometimes when I hear a proper introduction done, it sounds like the person you're introducing may be schizophrenic. But I know the power of doing a proper introduction in terms of how it reaches everyone that's in that entire room. And I can't wait till we get to the Jacksonville event so we can do an absolute training on how that works and how the third-party edification is where you get the power to literally build an organization in the industry. So I'm just flat out excited to be with you guys this morning. Again, I am Dr. Katrina Ferguson, and we are going to be continuing our conversation about how to maximize legally the deductions that you are entitled to as small business and home-based business owners. Now, again, sometimes people hear this information and they think, oh, here we go again with all of this green urchin type information. You know, I don't really need this. Well, I didn't think I needed it either until I got that letter from the IRS saying, prove your expenses, which is exactly what an audit is. And then I began to realize that not only were they keeping more money than they had a legal right to keep, because I didn't understand my deductions, how to legally maximize the deductions, I realized that they were actually taking advantage and they were actually taking advantage of people who would go in there for these audits and didn't understand that they had a right to certain deductions, that they literally were legal. There are people who have paid back money to the IRS, entered into payment agreements to pay the IRS money that they did not owe them, only because they did not know that they did not owe them. Matter of fact, what you'll find is that a lot of the people, even in the IRS, the auditors themselves, are not familiar with some of these deductions. Why? Because they don't work with them day in and day out. Think about it. We talked about in the very beginning how big the IRS tax code is. We said it was like the size of, 900 Bibles or something like that, right? The federal tax code is like 70,000 pages, and it's in 23 volumes, and it grows like 50 pages a week. Every week, the tax code is growing. Is there anybody that you know that's reading the tax code every single week? I'm sure they don't. I know I'm not. The Bible contains only 800,000 words, okay? So the tax code has 9 million words. The Bible itself is only 800,000 words. So we know that there's a lot of information in there, and the auditors nor most tax preparers are tax professionals. The auditors nor tax professionals are reading it cover to cover. And even if they did, who's going to remember all of that 900 million words? So what we have to do is become aware of what's available to us, so at least we can talk intelligently and say, no, there is something available for me in this area. Let's do the research and find it so that we can make sure that I get credit for it, and then be able to talk intelligently about it with an auditor in case they ask you to prove that expense. So what we're going to talk about this week And actually, we probably have about 2 more weeks, and then we're going to go ahead and do a wrap up so that we can get the information compiled for you guys. I'm super excited about the product that's coming out. We are about 3/4 of the way there, so I'm excited to share that with you. But we're going to talk about the key, one of your biggest tax deductions, right? The key to one of your biggest tax deductions is in most of our pockets or our purses, and it's the key to your vehicle. Your car represents probably one of the largest monthly expenses in your household. I know my vehicles do, because whether it's your car payments, your lease payments, you've got insurance, you've got fuel, repairs, maintenance, registration fees. If you're like me, and if you live in Florida, where you have to wash your car every other day to get the bugs and the sap and everything else off of it to protect the paint, you've got that expense. In some cities, I'm not sure what's going on there, Dr. Stan.
Yeah, I apologize, but keep on going. We got it figured out.
Okay, so hey, see, where was I? Oh, I was saying.
The car was your biggest deduction.
Okay, yes. So your car is your largest monthly deduction. The car is your largest monthly expense with all of your costs, fuel, repairs, car washes, registration fees, those kinds of things. When I lived in Virginia, we actually had personal property taxes as well. However, because of that, because you're in business, it's probably going to be one of your largest sources of tax savings as well. So what we had to do is begin to look at how can we legally start to write off some of these automobile costs, right? Because we should be able to find deductions for these things if we're spending that much money on them. A lot of taxpayers, they skip over this deduction just because they think it's just too difficult to keep records. And I remember someone told me, go to the drugstore. And I can remember going to get a mileage log, putting them in both of my cars, and then trying to remember every time I get in the car, write down the mileage when I left, when I would write it down again when I got there, write down where I was going and why I was going there. And I just remember thinking, this is just not worth it. It cannot possibly be that great of a deduction. Well, little did I know that deduction was worth about $500 or more for every 1,000 business miles that you drive. Let me say that again. In this year's numbers, the automobile deduction for mileage alone, just the mileage part, is worth over $500 for every 1,000 miles you drive. Actually, $580, because the standard mileage rate in 2019 is 58 cents. So every 1,000 business miles that you drive, you are throwing away $580 in tax deductions if you're not keeping track of this. All right? I don't know about you, but I don't have an extra $580 that I desire to get to Uncle Sam or anybody else just for nothing, okay? So let's look at these record-keeping requirements, and you'll see it's really not that cumbersome. They are strict, they are specific, but there's only 4 questions that you have to be able to answer. You have to be able to tell what day it was that you went, where it is that you were going, why you were going, and how far it was. That's it. What day you went, where you're going, why you're going, and how far away. So date, destination, the primary purpose, and the miles driven. Now, you've heard that term before, primary purpose. Remember, we talked about what the primary purpose for a thing was, and that would determine whether or not it was deductible. We're going to talk about that a little bit more here in just a moment. So one way of keeping track of that is, in fact, a vehicle use log. You can buy the log at the drugstore. You can put a notebook in your car. You can Google vehicle use log, and you can pull up an image and print it off. You can do that one. That's one way of doing it. It's very simple. You just write down the date. The destination could just be, Starbucks, right? You don't even have to put the street address. Starbucks to meet Dr. Breakthrough to talk about prospecting, and then how many miles it took you to get there, round trip. It's just that simple. It's not that much. I guess it could take you, 5, 10, maybe 15 seconds to do it. My challenge would be remembering to do it because I'm always moving so quickly. However, if you've already downloaded our Easy Tax Tracker, then you know that it's happening automatically in the background on your phone, so you don't have to remember to do it. It's happening automatically, and you are setting yourself up to take advantage of this 58-cent per mile business deduction. We'll talk about that here in just a moment. So literally, $580 for every 1,000 business miles you drive, or about $200 plus in tax deductions for every tank of gas that you put in your car. So if you put 10,000 miles on your car in 2019, you're looking at $5,800 in new business deductions. So you guys, we tease Dr. Stan about driving all around the country. Well, he's got a method to his madness, right? Because I know when I fly places, very rarely do I get a $5,800 tax deduction for doing so, especially since it doesn't cost him that much to drive most of the time. So it's almost like another stream of income, almost, okay? So let's look at this. What if I could tell you a way that you could also then get credit for your non-business mileage? Well, there is a way. There are several ways. Let's talk about it, okay? Remember, we always talk about primary purpose. What was the primary purpose for the trip? So let's say that you need to go to the mall to get an outfit for an event. Maybe your sister's getting married, so you need to go to the mall. Well, just take a couple seconds to think about what's at the mall. Is there an office supply store at the mall? Is there a copy shop at the mall? Oh, that's right. I need to get copies of the flyer so that I can start promoting for the next big event. So let me go get copies at the mall, at the store that's in the same mall. And while I'm getting my copies, I'll stop and grab my outfit. So what just happened? Well, your primary purpose for going to the mall now is what? To get those flyers copied. And while you're at the mall, incidental to that trip, you can get your outfit. Now that mileage is tax deductible, right? Or let's say that you decide to go prospecting. And you say, you know what, this is a prospecting day. I'm going prospecting at the mall. I'm going to go talk to some people at the mall. Your primary purpose now is business driven. Now, this is contrary to what I even teach in terms of prospecting in our business, because I say you prospect as you go. You should always be prospecting, always be talking to people about what you offer and how they can change their lives as a result of them offering it and joining your team. So you prospect as you go. You don't go prospecting, except if you're looking for tax deductions, in which case you go prospecting first, okay? All right, so you make sure that your primary purpose is business. Your secondary purpose is whatever it is. You don't even talk about it, right? It doesn't go in any of your documentation at all. So if there's two purposes for the specific trip, guess who the IRS says makes a designation as to whether or not which purpose is primary? The taxpayer. It's written. It's right in the code. So your primary purpose is always going to be business. You want to write that in your notes. My primary purpose for the trip is always going to be business first. All right. So that's how you begin to make those non-business trips, those non-business errands and shopping trips, business mileage, right? So you can get that deduction as well every single time. Now, how do you figure out what that tax deduction dollar amount is going to be? There are two options most of the time that you can choose from. One is the standard mileage rate that we just talked about. That's at 58 cents per mile for 2019. That number changes pretty much every single year, and you're simply going to track the mileage and put it in a log, multiply it by 58 cents at the end of the year, and that becomes the deduction that you take. Then there's also what's called the actual operating cost method. Now, this calls for more record keeping, and you're going to have both a vehicle use and keep track of the vehicle operating costs. So you have to have a log for both of those for the entire year. Again, it's more record keeping, but it can sometimes give you a higher tax deduction depending on the vehicle that you're driving, how much, if gas prices are high, then you're going to have more actual costs. If you have a gas guzzler, or if you have frequent repairs or expensive repairs and maintenance. If you drive an exceptionally expensive car, you might want to consider the actual operating cost method. It's a little more difficult, and most people simply benefit greatly from the standard mileage, but it's kind of up to you. It's your option. With that actual vehicle operating cost method, though, you have to be concerned about the business use percentage of your vehicle. Remember, we talked about the business use percentage of your home when we talked about deducting your house expenses. We have to do the same thing with your vehicle. So what you would do is add up the total operating cost for the entire year, and you're going to multiply that by that business use percentage, and that's going to give you the amount that you can deduct. So some people will track both throughout the year and just determine which is the higher number at the end of the year, and that's what they're going to deduct. You can also, with that method, you can claim depreciation on your vehicle, but I'm going to just caution you. If you're claiming depreciation on anything at all, you really want to make sure you have a tax professional that understands depreciation to do that for you, because that can be a really big problem if you don't do that properly, okay? What exactly are vehicle operating costs? Well, this is going to include anything or any expense that you incur because you have a vehicle that you wouldn't have if you did not have a vehicle, right? If you didn't have a car, you wouldn't have car insurance. So that makes it a vehicle operating cost. If you didn't have a car, you would have to pay for a car wash. That's a vehicle operating expense. So those are those kinds of things: maintenance, windshield wipers, batteries, extended warranties. If you have to pay for renting a garage to park a vehicle in, tires. When Dr. Stan had that blowout on the highway and had to negotiate to get it repaired quickly to get to that event, that whole scenario was deductible. Even if he had to stay over in that city as a result, it would have been deductible. Okay? So you want to begin to think, am I going to use the standard mileage rate, or am I going to use the actual operating cost method for my vehicle expenses? And that's a good conversation to have with your tax professional. Now, here's another way that you can that will help you to keep track of your records and deductions. And I tell everyone this anyway. Remember, we talked about not commingling funds. So what you want to do is get a credit card that has a zero balance and just use that for your auto expenses related to business. That's it. That's the only thing that you put on there. Now, you can't pay your car payment there, that kind of thing. So use one account, one bank account for your auto expenses. And that way you've got them all in the same place. So if, in fact, the IRS does a correspondence audit or comes around and says, we want to know where your money, where your expenses are, how did you take care of it, how did you pay for it, you have all of that in one place, and you're not spending a whole lot of time trying to put it all together. That's really the thing about an audit when they ask you to prove your expenses is, how can you prove it quickly? Because like I said, that year that I owed that $61,000 that they said I owed, I should say, and I only ended up owing $1,100. No, they had to pay me back $1,100. That year, the reason it took so long is because I did not have an organized method for all of my receipts and bank statements. So I had to put it all together, copy, highlight, annotate, thank God I had a legal background so I understood how to document things in a way that we could cross-reference. Otherwise, I'd probably still be working on it. So it's not that they're asking for the information. It's making sure you have the information in a way that is easily accessible. So you can just pull a report and a bank statement and say, here it is, and be done with it. Another way that you can do that is make sure that on your check register, if it's, if you're paying it from an account where you have other things, just use different color highlighters. The IRS actually says that throughout the year, we should be reconciling these expenses within 7 days of incurring them. Right? I know that's laughable, but that is the rule. Another way, just put a spiral notebook somewhere so that you can keep track of them in writing, or maybe even, an app on your phone. Of course, Easy Tax Tracker will do all of that for you as well. That's available at easytaxtracker.com. Now, let's talk about whether or not you can take these deductions if you don't own your vehicle. What if you're leasing your vehicle? Well, both methods are still available to you, okay? So the standard mileage rate method is available whether you own or lease your vehicle. But regardless, you have to choose it in the first year that the vehicle is placed in use for business. So the first year that you say, okay, I'm going to be using this vehicle for business, you have to use the standard mileage rate. Now, in later years, you can change it to the actual cost method, but the first year it's got to be mileage. Now, if you're leasing it, though, you have to use the standard mileage rate for the entire lease, and then you have to use it for renewals as well. Why? Because a lot of times under the lease agreement, you're not responsible for those expenses. So you can't take that. You can only use the mileage. Regardless, though, of whether you're leasing or owning, you want to make sure that you are, whether you're leasing or owning, whether you're using the standard mileage rate or the actual cost method, you can still deduct 100% of parking fees, 100% of tolls, anything like that when you're driving for business purposes. So you want to keep track of those things. Always get a receipt when you go through a toll, and then when you stop, just take a quick picture of it, upload it into the app, and then you'll have it. You can throw it away later. Okay? Same thing with interest paid on your vehicle loan, as well as any personal property taxes. Those are deductible as well. Now, and you can also, if you're leasing, you can deduct a percentage of your lease payment, which is powerful based on your business use. So if you're using the vehicle totally for business, remember I told you before, always have two vehicles. If you're using that vehicle totally for business, you can now deduct the entire lease payment as a business deduction. Okay. There are some other miles though that are deductible as well, not just your business miles. If you do any charitable work, right? If you do any volunteer work, if you volunteer at the hospital, you can 14 cents per mile is deductible. So you want to keep track of that. If you are going to doctor's appointments, hospitals to obtain health care, did you know that that's called medical mileage and it's deductible at 20 cents per mile in 2019? So all those doctor's appointments and you're running here and there to see this doctor or running down the road, 300 miles to go see a specialist, God forbid that this is your story, but if it is, you can actually deduct that mileage as well. And if you're active duty military and you're moving, of course, 18 cents per mile, you can deduct that as well. So there are so many, many, many ways that you can deduct mileage on your car. Think about that. How many of you have been doing it? How many of you wish you had been doing it? Now, did you know also that you could possibly even deduct the mileage for you commuting from home to your office? There's a little-known rule in the IRS code, and it's called the two business location rule. And what that rule says is if you have two locations for business that you regularly are required to travel between, then the distance between those two locations could be considered a tax deduction as business mileage. So if location A, what if that is your home office, right? For instance, today I'm working from home. So I'm in my business office at home. I have my desk, my computer, my file cabinet, everything right here at home. But I also have a physical office for another of my businesses. So when I travel, when I commute from quote unquote home, my home office, to my business office, that mileage is now deductible. Even though from my other business, I give myself a W-2. So that's my W-2, quote unquote W-2 job. Even though I own the business, I give myself a W-2 from that position for a lot of reasons. That's another conversation. That mileage now, that commuting mileage, is deductible. So you want to definitely get with your tax professional and find out, hey, is the mileage between my home and my job, even though it's W-2, can it be deductible? It's possible. Now, it's one of those rules that has never come up to the tax court yet. There hasn't been a case where someone claimed it and the IRS said no, and it had to be ruled on by the tax court. So it's one of those deductions that's kind of like, we're taking it, but it hasn't been tried, okay? So I just kind of like to let people know when I know that it hasn't been put to the judge yet, that that's what's happened. Now, just real briefly, I'm going to go into another category today. I know normally we talk about one, but this one is also pretty short. And because it is July going into August, and a lot of us are doing this right now, we want to make sure everybody knows that you should probably never, ever take another vacation. Never. You should never take another vacation. From now on, your travel should become tax-deductible business trips. Now, this only pertains to domestic travel. This only pertains to domestic travel. And I probably should have started with our disclosure that says that these are just giving you an idea of what you can do. Everybody's tax situation is totally different. So just because I'm saying that these are possible deductions doesn't mean that you qualify for them. However, a business based in your home has some territorial limits, normally in the United States. We know in our business we can go nationwide and international, so there are some other types of deductions that we can take, but we're only going to talk about the domestic deductions today, okay? So wherever you travel, it could be that you're traveling on business. And because of that, reasonable business travel expenses are tax deductible, even if you combine them with a personal travel or vacation with your family. I spoke with a young lady on the phone yesterday who said that she's coming to Florida for the event. That's her primary purpose. Remember, primary purpose is coming for the event. Well, while they're here, they're going to stay. That makes it now a business trip. Now, again, there's some very specific rules, but they're super easy to comply with. So what's got to happen is you have to meet the IRS's three-part test, which is this. First, the travel has to be helpful to developing and maintaining your business. Is coming to a training event in your industry, is that going to be helpful to develop and maintain your business? Absolutely. Is it conducted, number two, with the intent of obtaining a direct business benefit? Yes, I'm coming because this information is going to directly benefit my business. Okay, check. Thirdly, is the travel usual and customary with the type of business that we do? Sure. I mean, we've been to Branson, we're coming to Jacksonville, we'll be in Houston, we're going to Napa Valley, San Francisco, a whole lot of different areas. So it's customary that we travel. This was the real category that when I was audited, they could not understand. Because at the time, my travel expenses were more than most people's salary. I was spending $45,000 a year in travel because that's what we did. We traveled around the country doing big events. So they could not understand. And they had disallowed my entire category of travel. So I had to go in and prove to them this is all business travel. And because I had airline tickets and I had itineraries and hotel bills, they had to put all of that back. They had to allow the expenses because they were usual and customary. They were intended to create a direct business benefit, and it was helpful and appropriate to developing and maintaining my business, building my team. That's why they were all deductible. The other rule that you have to meet is the 51-49% transportation rule. That means that when you combine the business travel and the personal travel, that so that you can deduct that 100%, more than half your days away have to qualify as business days. More than half of the days that you're gone have to qualify as business days. And let me share with you how to qualify those days as business days. A business day is considered a travel day as long as it takes you more than 4 hours to get from your home to the front door of the hotel. That's considered a travel day, okay? Any day that you spend more than 4 hours working on your business is going to be a travel day. And any day that you have a pre-scheduled business appointment, regardless of how long it is considered a travel day. A pre-scheduled appointment meaning that you scheduled it before you left your home. So if you call into Florida because you know you're going to be here and you schedule some specific appointments, on those days that you have those appointments to do business, those days are considered business days, which means that the expenses for those days are tax deductible, right? So remember that. You want to make sure that your days are tax deductible, and you have to be able to prove it if they ask you to. How do you prove it? You make the appointment, you send them an email, and you say, hey, thank you for agreeing to meet with me on Thursday at 4 o'clock to talk about how these hydration drops are going to change your life. You're going to be blown away. And then when you get home, you send an email saying, it was great meeting you. I'm glad you got the drops. Or if they didn't get them, here's the website just to follow up, for your convenience so that you can order your drops. That makes it totally a business day, okay? That makes it a pre-scheduled appointment. and you can use it as a business day. Why is that important? Even weekends, holidays. You can even stay over on Saturdays when you have that type of an appointment made, okay? So you can that's how you can tell whether or not it's going to be considered a business day, and then your expenses are totally deductible. So you'll be able to deduct your lodging costs, your round trip, whether it's airfare, train, bus, however you got there, tips, incidentals, plus 50% of your meals on business days. Only 50% of your meals are deductible because the IRS determined that you have to eat anyway. So, and here's the other thing. When you're required to remain out of town for one night or more, then there are some other costs that are deductible. Your laundry costs are deductible, or dry cleaning. If you drop something on your clothes while you're on a business trip and you take it home and have it cleaned, it's deductible because it happened on your business trip. Your personal grooming, haircuts, manicures, all those things, they are not deductible unless you do them while you're on your business trip. So wait till you get where you're going to get your haircut. Wait till you get where you're going to get that manicure. Now, if that, why don't you just take all your dirty laundry with you and do it while you're gone? Send it to the dry cleaner while you're away. Now it's all tax deductible. Okay? Just some ways to maximize legally the deductions that are available to you as home-based business owners. Now, somebody is saying, okay, but here we are, halfway through the year. I haven't kept any of these records. What about me? Well, the law also has, the code also has in it a per diem. So you can use the per diem. You need no records to take advantage of the per diem. The per diem is the day rate that will help you. You can use this to cover lodging, meals, and incidental expenses. For business travelers right now, the per diem is $55 per day is for a full day. That's the per diem rate that the IRS gives us. There's no record-keeping requirement, and the amount that you claim is dependent on where you're visiting, the dates you're there, and how many days that you're going to be there. So normally it's about $55 a day. There are some exclusions, or some places that it's a little bit less, but on average it's about $55 a day. And you don't have to decide whether you're going to use actual expenses or per diem until you get back. So what I would do, like if I had trips where someone else was paying all my expenses, so sometimes when I go speak places, they pay my airfare, my hotel, everything. They buy my food while I'm there. Well, I'll just take the per diem rate because I can't prove the rest, okay? So, and I don't, so now again, that just becomes an additional deduction, okay? No receipts are required to take that per diem rate. Now, I know when we talked about health care, being able to get that health care for your spouse as well. Well, the only way that your spouse will qualify for these travel deductions in business is if their travel is for a bona fide purpose. Maybe you have a resource table, and so they're manning the book and tape table. Okay, they can't just be there to be supportive or just to accompany you. They have to have a business purpose for being there. If they're an employee or owner of the business, or if the travel and related expenses would be deductible for him if you weren't there, him or her. If your spouse could go and you weren't there and it would be deductible, then they're deductible for them as well. So, I mean, there are just so many ways and so many deductions that are available to us. And again, you want to make sure that you have a tax professional that understands the deductions, or at least is willing to look them up for you. The best way, though, is to literally download the app at easytaxtracker.com. Download it to your phone. Let it run in the background. When you get your credit card for your business account, register it. It'll automatically pull the business expenses into the report for you. It'll save you a lot of time and money at the end of the tax year trying to get prepared. And isn't that what we need, is a system to save yourself some time, energy, and money at the end of the season so that you can just give these things to your tax professional. They can prepare your taxes, and you can go on with your life. Not worried about what happens because, one, you know that they're done accurately because the numbers are accurate. They're the actual numbers. Nobody is fudging or making up anything. And secondly, because if you have to prove them, they're in a provable format already. If this doesn't save you a bundle of money, what I'm sharing with you and have shared with you, I have to tell you, it's your own fault. It really is. If you're like, oh, I'm so bored with this tax information, then don't save the money. It's fine because somebody wants to. And I'm only telling you from experience. My own father, for years, I didn't do my dad's taxes. My dad has, he's retired. He owns a real estate. He has business that he leases space to, and then he has another business that he creates income from. And my dad was paying $15,000 a year on average in taxes. And I'm like, Dad, you're old. Why are you paying taxes? Yeah, we talk to each other like that. I said, Dad, just give it to me. Let me look at your last 3 years and see what's going on here. We went back, and my dad not only got the IRS refunded my dad anywhere from $7,000 to $11,000 a year for each of those years. Why? Because he had someone doing his taxes that did not understand the benefits of being in business for himself. We had to form a corporation. We had to do some things to put him in position for that, and it took a little bit of time. Well, ultimately, he was calling. He's like, I just got another check from the IRS. I was like, Dad, just cash it. He's like, should I put it in my regular account? I was like, do whatever. It's the IRS. It's your money. He was like, is this a scam? I'm like, Daddy, no, it's your money. You should never have had to pay it in the first place. And that's what I want you guys to leave this conversation with today, is an understanding that if you don't save a bundle of money, if you don't maximize your legal tax deductions, if you don't apply the things that you learn on this call as well as the other calls and the other things that are happening, it's your own fault. So I appreciate the time. Dr. Stay, I'm going to go ahead and turn the call back to you.
Wow.